Yeah, thanks, Stephen, and good afternoon, everybody. On behalf of Emkay Global, I would like to thank the management of Arman Financial for allowing us to hosting this call, and also would like to thank everybody for participating. And now I'll hand over to Alok for opening comments. Over to you, Alok, now.
Yeah, thanks a lot, Jignesh, and good afternoon to everybody. Thanks to everyone for joining and taking the time out of the day for our first quarter results discussion. As you might have seen, we have already issued a detailed press release and investor presentation for the past quarter. Hopefully all of you have had a chance to review it. At the outset, I hope you and all your loved ones are healthy and doing well in these unprecedented times. Since we last spoke, the economic scenario has much improved. More importantly, our overall collection efficiency has picked up well from 66% in June to 80% by August. And with that, our liquidity position has also improved considerably. I will first begin by giving a brief overview of our financial performance for the first quarter, and post that touch upon collections, liquidity, and disbursements in more detail. At the end of first quarter, our consolidated loan book stood at 823 crores, higher by 14 crores over the last year. This is led by the traction seen in the MSME and the microfinance segments. Our microfinance portfolio grew by 18% YOY to rupees 605 crores, while our MSME portfolio increased by 22% to 136 crores. Growth in both of these segments were primarily driven by customer additions. Active customer base for microfinance and MSME grew by 23% and 36% respectively in YOY Q1. In the urban two-wheeler segment, our performance was impacted by the decline in two-wheeler sales in the preceding fiscal year and the drastic drop in two-wheeler sales during the first quarter during the lockdowns. However, our newly launched rural two-wheeler products saw some good traction up to February last, recording a year-on-year AUM growth of 51% to 11 crores by the end of June. The rural two-wheeler book now constitutes approximately 13% of the total two-wheeler portfolio. Given the countrywide lockdown and the economic uncertainty caused by the pandemic, we prudently chose to halt disbursements in the first quarter. This, combined with the pickup in June repayments, led to a rundown in our loan book on a sequential basis. Our net total income was lower by 8% year-on-year at 27 crores in Q1. This decline is mainly attributable to, number one, softer yields in the microfinance and MSME segments, and number two, no booking of processing fees in the absence of disbursements in the first quarter. Furthermore, as a prudent measure, we chose to maintain an ample liquidity buffer and also applied for a moratorium on loan repayments in April and May. This adversely impacted our net total income owing to this negative carry cost. The company took several measures to reduce operating cost. While there were no layoffs or salary cuts, there were reductions in other operating expenses like incentives, sales and marketing expenses, traveling expenses, and other administrative costs. As a result, our operating expense came down by 14% as compared to last year, enabling us to improve our cost-to-income ratio by nearly 250 basis points to 37.5% in this quarter versus 40% last year. In keeping with our conservative approach, we strengthened our provisioning coverage by recognizing additional provisions of 10 crores during the quarter. With this, the cumulative provisions at the end of June 2020 stood at about 30 crores, covering approximately 3.9% of our on-book AUM. They should help us deal with any impairments on account of COVID in the future. Our asset quality has continued to remain unchanged sequentially due to the RBI announced moratorium. Further, we remain adequately capitalized with a consolidated debt-to-equity ratio of 4x. Now moving on to our operations and collections. We have been successful in getting our operations back on track post the lockdown. all our branches are operational now, with few of them operating from alternate locations as they were originally located in containment zones. There are ongoing intermittent lockdowns in several areas of operations, which is being managed by the field team to the best of its abilities. On the collection front, as I highlighted earlier, there have been continued improvements since June. In microfinance, repayment rates were 76% in July and 75% in August versus 59% in June. That's in microfinance. At the standalone level, which is MSME and two-wheeler, the collections were much better, with both the two-wheeler and MSME segments recording repayment rates of more than 90%. In MSME, the repayment rates were 95% in July. 95% in July and 92% in August versus 85% in June. And in the two-wheeler segment, the repayment rates were 97% in both July and August versus 95% in June. So let me just say that again. I think I twisted my tongue there a little bit. The MSME repayment rate was 95% in July and 92% in August. It was 85% in June. In the two-wheeler segment, both July and August recorded a repayment rate of 97% versus 95% in June. Furthermore, cumulative provisions at the standalone level stood at 10.5 crores at the end of Q1, covering almost 70% of the standalone moratorium book at the end of August. One minor blip with respect to collections was the overall repayment rate showed a very minor decline in August compared to July. This was mainly because of three reasons. Number one, there were many festivals and consequent holidays falling in the month of August, which created a lot of logistical issues both with the customers and the employee level side. Number two, there were heavy rains in numerous areas of our operations, creating logistical issues, especially in places like Gujarat and Madhya Pradesh. And number three, continued intermittent lockdowns in several areas of operations. Going forward, over the next few months, we expect the overall repayment rates to improve significantly as the unlocking of the economy gains pace and restrictions are further relaxed with announcements of Unlock 4 guidelines by the government from September onwards. On the disbursement fronts, we have gradually resumed disbursements from August onwards. In microfinance, to begin with, we are only focusing on renewing loans of existing customers who have finished their repayments on time and completed their tenure. We are not making any top-off loans or anything similar to that. And I guess I can answer about what that exactly means during the Q&A session. In the MSME and the two-wheeler segments, we are open to lending to new customers, but we have tightened our underwriting standards further. In terms of liquidity, we are very comfortable in a very position right now. We have cash reserves of approximately 141 crores, including the undrawn CC limits. We have repaid all the debt obligations that were due from June onwards, as well as all the loan moratoriums that we had availed in April and May as well. Moreover, we have raised 75 crores at very attractive rates in the start of the fiscal year to bolster our liquidity position even further. So finally, to conclude, I would like to express my continued gratitude to all of our stakeholders for their continued support during these difficult times. A special note of appreciation to my field staff, whose perseverance and untiring efforts have helped us report better repayment rates in July and August. On a whole, we remain quite confident that our high-touch, rural-focused business model can withstand this ongoing COVID storm and hopefully emerge even stronger and more resilient than before with the learnings gained during this period. On that positive note, I would request the operator to open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The first question is from the line of Amit Mantri from 2.2 Capital. Please go ahead.
Yeah, hi Alok, Amit here. Can you talk about the divergence that is there between collections across different states or urban versus rural? Because in the last quarter, there was a fair bit of divergence. Gujarat had done quite well, and especially some parts of Gujarat had done phenomenally well. So do we continue to see a wide divergence across states even now, or has that now reduced significantly?
No, it's still there. So I think a lot of these things are luck of draw. So if I was just joking the other day that during Demon, 80% of our portfolio was in Gujarat, and I wish that was the case today, because Gujarat we are seeing about 85% repayments even in the month of August, which actually went down a little bit due to the rains from 87% in July. So Gujarat is doing quite well. MP we had seen somewhere around 75%. Rajasthan is doing quite well at 85%. UP is average at about 75%. The most affected one, honestly, is Maharashtra, which is, 53 and 59% respectively. So that's improving overall, I think, but it's going to take a little bit longer to make improvements in Maharashtra compared to a lot of the other states.
Okay. And on what is the average cost of funds and the incremental cost of debt that you're currently raising now?
So average cost of funds, actually, I haven't calculated in a while. It was in March, it was about 14.5%. That has come down to about probably around 12.5, 13 or so. We raised money from Mudra, SIDBI and NABARD at about 7%. And the total amount we raised was about 90 crores. Yeah, sorry. So about 90 crores. So that would have made the weighted average cost go down a little bit. But the funds are available at a cheap cost right now, especially from the DFIs. But still, the market is still not very liquid right now. I think most of the banks and everybody are holding on to liquidity. We sort of have a reverse problem. So we are not looking to raise funds since we already have so much excess liquidity. So until the disbursements pick back up again, I don't think we'll be going into the market to raise any more debt funds at least.
Okay. And in Q1, while there has been some rundown in the loan book, but because collections are only started in little bit in May and a little bit more in June, so the rundown is still not significant. But in July and August, with a fair bit of collections happening and very good disbursements happening, now the portfolio is beginning to run down probably quite rapidly. So where do you see the AUM kind of stabilizing before again you start growing over the next few quarters?
So we are anticipating about a 15% decline in the AUM until it stabilizes and then picks up back again. So the decline will be partially offset by the interest accruals for the moratorium. So otherwise, the drop would have been much more significant right now.
Yeah. Okay. And so in terms of cost to income, that would have probably a negative bearing with if there's a 15% drop in income. So how would the PPOP get managed in that scenario?
So our costs have already come down. We have a natural sort of a turnover that takes place, although the turnover has gone down quite a bit. But we do have a hiring freeze in place, so the number of employees are reducing on a month-to-month basis. The incentives have sort of come down. The administrative cost and things like that have come down. Traveling has significantly come down. So already the cost efficiencies are in place, and of course we are trying our best to reduce them further. But there is only so much you can do, to be honest, because you still need people on the ground level to collect the money, whether you have a disbursement or don't have a disbursement. So those are the key people that you need. So on a field level, there is very little cost efficiencies you can do from a employee level perspective. But even on the interest income or the interest expense side, I think you should see a drop in that as well, because thanks to the cheaper funds that we have recently raised.
There will be interest resets with PSU banks.
There will be some resets with the PSU banks as the repo rates and stuff continue to go down. So hopefully that is enough to offset any decline in the income side.
Okay. And lastly, on the in terms of the provisions that have been made on the standalone entity level, I think now you almost have 5% kind of provisions, and while your collections there are actually almost 95%, close to 95%, and that's even before the moratorium has ended. So on the standalone level, you're probably quite well covered in terms of provisions. But on microfinance entity level, do you expect to keep making more provisions? Where do you expect the credit costs to eventually stabilize? Would it be in the high single-digit percentages or low single-digit percentages kind of?
Amit, to be honest with you, I'll answer your first question as saying yes. We expect to continue making provisions. The write-offs will be are a little bit far away at this point, because the moratorium just ended. Let's see what the repayment rates look like. I think the month of September and October will be more critical to assess what kind of loan losses that you wind up actually looking at. For numerous reasons, I would rather not venture a guess of where we might wind up at.
Sure.
But that being said, my expectation is that whatever provisions that we have right now, will probably have to continue making some more provisions in the coming quarters, at least on the MFI book.
No. Okay. Thank you very much, and good luck with the post-moratorium phase.
Yeah, thank you. We need it.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Abhishek Murarka from IIFL. Please go ahead.
Yeah, hi. Good afternoon, Alok. Thanks for taking the question. So I have 2 questions. One, for MFI, how will the restructuring work? I'm not quite sure if restructuring is allowed in the first place, but what I had heard is that some part of the MFI loans are allowed to be restructured. So what is the dispensation there, and how are you going to use it?
I am as confused as you are about the entire restructuring. So FY, which is our industry body, has written letters to the RBI, and we are awaiting that. But that being said, it will be unlikely that there will be significant restructures that is being allowed on the MFI book. If you look at it from a practical standpoint, the entire moratorium exercise was one big restructure anyway.
Correct.
So whether it's allowed or not, hopefully it doesn't come to that place where we actually have to use it. I would rather not use it, if at all possible.
Right. But the default option will be, so for example, in August, if 75% have paid and 25% have not, the default approach for you would be that for those who have not paid, you will push the EMI to the end of the tenure. Correct. So that will also entail some restructuring, right? Because it won't be like for like, right? It won't be 1 month to 1 month. It will be a little more than 1 month because of the interest and the compounding.
So that's already done. So that is the moratorium, quote unquote, restructure is already done. So that's already in place. So let's say a customer has not paid in April and May.
Right.
Their repayment schedule has already been adjusted, recalculated. and extended by 2+ installments, right? Contractually.
Okay.
So, and whatever accrued interest has gone into further installments. So in lot of cases, if it's a early loan that was given in January or February and the customer took 5 months of moratorium, that might add more than even 2 installments of interest accruals towards the end of the loan.
Got it. So by when do you think you'll get to, let's say, 95% plus collection efficiency in MFI? Just going by the rate of improvement that you are seeing, what is your gut feel?
Yeah, I was expecting these questions in numerous different forms. I'll tell you the same thing I told Amit, is that I'm not sure. I would rather not venture a guess at this point, except to say as soon as possible. I don't know where it will reach, whether it will reach on a static pool basis, reach 95 or 98 or 90 or whatever it is. I would rather not put in guess.
Sure.
But, I remain cautiously optimistic. Every month there is sequential improvements. Customers who have not paid continue to pay. I think over 87% of our customers, or 88% rather, have paid at least one installment, over the moratorium period in the last one. So that's, let's see how many more of those 12% we can convert now that the moratorium is over. But there is distress here. The rural people are not impacted as much as urban, but that's not to say that they have not been impacted at all. How many people in your circle do you know who have SMEs and MSMEs and restaurants, or have not been able to pay rent, or not been able to open, or their businesses are in shambles? So you have to be very cautious. You cannot do hard recovery right now, because that's going to backfire on you. You have to be sympathetic to your customers and just give them time, if they need it. So you have to create a nice balance on the field.
Nobody has said that, okay, they will not.
No. I think majority of our customers are asking for time.
Right.
Earlier it was moratorium time.
Right.
Now that the moratorium is over, our collection effort will change, right? Earlier on, if a customer said that give me moratorium, we could try and convince him, well, you'll have to pay higher interest. If you have the money, pay us, all that stuff. But if he insists, we have to grant the moratorium. Now we have to say that the moratorium is over, right? Now you have to start paying your installments. So we'll have to switch our gears a little bit from our whatever we explain to our customers.
Sure. And in July, August, what has been the disbursement for MFI specifically?
In July, we had no disbursement. So we started disbursements in August. It was about 12 crores in the MFI book, and MSME it was, I think, about 2 crores. So, 4 crores. 4 crores in MSME and about 12 crores in MFI. Two-wheeler urban we have not restarted yet, but we'll start it from this month. So it's not a very large numbers, but it's starting, and I think it should increase more and more as time goes on. So our major concentration was towards repayments, at least during the moratorium, the collection side.
Right. And just one more question on this interest accruals, interest capitalization. So when I look at your AUM, and we will have some collections, and there is no disbursement. So whatever collections are there. So the difference between that is the amount of interest that is capitalized, right?
No, I don't think so. So the amount of interest, you are talking about the moratorium interest accruals.
No, okay, sorry. So just to be clearer, your microfinance AUM, let's say, starts at 620 crores as of 4Q. and then falls to 605 crores. There would be some collection in the in this month in Q1, and there would be a difference between your 620 minus the collections and the 605. So the difference between these two numbers would be your interest capitalized.
Let's table that question for now because I'm still a little confused. But maybe if I visualize it on a piece of paper, it might have it. I kind of know what you're trying to say. Overall, the collections have come in. If it wasn't for the interest accrual, the portfolio would have declined much more than 605 crore. So
right.
That makes sense.
So your 1Q collections were how much in MFI? You've given June, which was around 40 crores, but
the Q1 is June only, right? June only, no? So April it was 0%. May I believe it was 12%.
Okay, so it's pretty close to the whole quarter's number.
It was 60.
Yeah, because April and May there were hardly any collections because of the lockdown.
Okay, got it.
What the 90% of actual collection really is.
Right. Got it. I think that's clear. Thanks for those.
Sure.
Thank you.
Yeah.
The next question is from the line of Viraj Mehta from Equirus PMS. Please go ahead.
Yeah, hello sir. Most of my questions have been answered. Just one thing. Right now, if you look at your debt to equity is pretty not that high, and growth also seems like a slightly distant possibility, at least for next couple of quarters. But you did mention that we will not raise money through debt, but in last quarter also, and if I read between the lines, this quarter also, it seems you're pretty open to raising money through equity. Is that the correct understanding?
Yeah, I'm open to it. If it's available, I'm open to consider it.
Okay. Thank you.
It's not something that is absolutely required. At this point, for future growth, it will be required. But if I'm going to raise it in the future anyway, I might as well have the nice blanket. I think there's an echo. Somebody's on speakerphone. But what I was saying, if it's available today versus in the future, I'd rather take it today just to have that safety factor of additional equity. But it's not something that I'm absolutely desperate for at this point.
No, absolutely. Thanks a lot. Thank you.
Thanks.
Thank you. The next question is from the line of Avinash Tanawade from Dalal & Broacha. Please go ahead.
Hello, sir.
Hi.
So, in microfinance portfolio, how many percentage of our customers are unique to us?
What percent of customers are unique to us? That's your question?
Yes, sir.
It's very difficult to we run the credit when we disperse the loans between 25 to 35%. Earlier it was 40%, but in January and February, somewhere around 30-35% are no hits.
Okay.
But if borrowed from somebody else after they took my loan, all of a sudden they are to me. So it's a question to answer on a static. Typically 25-30% is a good estimate of that would be unique to me. That would be first time borrowers from me.
Okay. And what percentage of people are doing income generating activity in MFI loan?
100%. So we only loan money for income generating activities. That said, sometimes you lend for income generating activities and it gets put into discretionary use. Safety mechanism placed, sure get reduced as much as possible, but otherwise it's very difficult to track sometimes whether the money has gone. Yeah, there are LUCs in place, what we call loan utilization checks in place. But something that they bought like cattle, it might be easy to verify. If it's a working capital loan for a kirana store, it's hard to tell whether the money actually went into income generating activities. But, when you talk in a micro level, the way I like to explain it is that these guys don't have different pockets for home use, personal use, or business use, right? They have some quantity of money, and whether it's for an education or food or for business, it's coming out of the same pocket. So on a micro level, it's not like they are keeping balance sheets and stuff like that in place and keeping a absolute difference. This is for business use and this is for home use. So it just kind of gets mixed in.
And how many percentage of customers are having a 3 or more cycles with us?
3 or more cycles of customers. So that would be about 20%.
3 or more cycles.
Yeah, 20%.
20%. And in terms of MSME loans, so most of the reading what I done, there was many where there is a severe impact on MSME customers. So what kind of customer base we have? Because we have a very good collection efficiency in MSME portfolio. Could you just throw some light on that? That would be very helpful.
Yeah. So MSME is a pretty broad term. So urban, rural, 5 crore loan, 1 lakh rupee loans all falls under an MSME umbrella. It depends on what flavor of MSME you are doing. For us, our MSME is basically microfinance plus. So these are customers who are running businesses that would need sort of larger ticket sizes than what you would get in a typical micro loan, but they are still rather small to approach banks, or they don't have the necessary paperwork to approach banks. So our target is those rural customers. And yes, it was a very pleasant surprise that our repayment rates worked out to be so well. I think the month of July was exceptionally well. And we saw a lot of clawback as well in that from the previous months, or retrospective moratorium cancellations. We didn't see that much in the month of August, so there was a little bit of a reduction in the MSME repayment rate, but doing quite well. So I think we can concentrate a lot on MSME in the future.
So these MSME loans which you have given, are we keeping any kind of security, or they are purely unsecured loans?
No, these are unsecured loans. I mean, the average ticket size is 75,000 type loans. Very difficult to get security for such a small loan. And the OPEX you would have to do to actually secure those assets would be incredibly high for such a small loan quantum. So it doesn't make sense, right? To mortgage something would cost 8,000 to 10,000 rupees at a minimum. So, and that aside, even if the customer is willing to pay for it, nobody is going to give a mortgage or anything like that on a 75,000 rupee or a 1 lakh rupee loan. We do take PDCs. We do take PDCs in case of a default. We do have an option of filing 138 under Negotiable Instruments Act.
Okay. And in MSME loan, how much percentage of our portfolio is in rural and urban?
It's all rural, 100% rural.
100, come again? Sorry.
It's all rural. Some of it might be in semi-rural or semi-urban areas, like in Indore, in places like that where we are working in the outskirts. But that'll be a very small portfolio. 97 plus will be in rural areas.
Okay. And in two-wheeler, the disbursement was mainly happen in rural areas, not in urban areas. Any specific reason for that?
Which one? Which two-wheeler you are saying?
Yes.
Two-wheeler, we have an urban book, which is the largest. So that is all urban portfolio. And we started a rural two-wheeler portfolio for which we have about only a 11 crore portfolio. So that started as a pilot, and thanks to COVID, that has been kind of on hold right now. But we are ready to pick it up whenever things improve.
And about our cost-to-income ratio, so where do we see that stabilizing going forward? There is some lower cost-to-income ratio this time. So how do you see that pan out in next few quarters?
Very difficult to predict, sir. I mean, these are very difficult times. There's nothing ordinary about these times. As I told the first question answer, that we have taken a lot of steps to reduce cost. But as disbursements and stuff starts picking up, very difficult to judge. But we'll try to keep it as stable as possible.
Okay. And how many percentage of our employee get back on to our workforce?
Sir, I'll answer the last question, but otherwise I request to get back on the queue. What was the last question you had?
Also, in terms of employee base, how many percentage of employee have resumed their work?
They have all of them have resumed or they are off the payroll. So if they have not resumed, then they are not on the payroll.
Okay, sir. Okay.
Thank you. The next question is from the line of Avdul Joshi from Newberry Capital. Please go ahead.
Hello.
Yeah. Hello. Hi. How are you?
Yeah. Good afternoon, sir. Question was about rural two-wheeler loans. In the opening remarks, you mentioned that it has grown to 13% of the two-wheeler loan book, right?
Yeah.
Yeah. So did we disburse in the August for two-wheeler loans, rural sector?
This is year over year, right? So it's comparing Q1 FY19 versus, Q1 FY20 versus Q1 FY21.
Okay. And about the disbursement, you said that you have tightened the norms. Can you elaborate about it, please?
So in the two-wheeler side, we have started only doing cases where CIBIL scores are over 70%. 70%, sorry. Excuse me, 700 plus.
LTV is nothing less than 70%.
And LTV is nothing less than 70%. In the MSME side, we have, the ratio of free cash flows or whatever, the cash flow analysis, whatever excess cash flows they have. Earlier, we used to lend up to 70% of that. Now we have reduced that to 50%. And a few other steps we have taken out from the occupations, so allowed occupations, which it's rather a long list. But any occupation which we feel might be impacted in the long run due to COVID, we are not financing those occupations.
Okay. Thank you. That's all.
Thank you. The next question is from the line of Anand Jain, an individual investor. Please go ahead.
Thanks for the opportunity, sir. My first question is, can you throw some light on who these 25% are in terms of, what is the geographic distribution from the microfinance side where we have not been able to collect? Kind of geographic distribution in terms of some other profile, if you could give some idea.
I mean, it's a very wide profile. A lot of our customers are involved in allied agri or agri. There is very few direct agris which we have in our portfolio due to risk reasons, although right now that seems to be the industry that's performing the best in India according to the new GDP figures. But there's a very wide variety of occupations that we do, and the ones that are not paying are the ones which are disrupted, right? I mean, you'll have the street vendors and you'll have, I don't even want to venture a guess, the small dhaba owners or some of the kirana walas which were facing issues earlier, now they are opening up. Overall, there's a very wide variety of people. You have
those who are involved into farming are
okay.
Are absolutely okay. Fundamentally, the dairy or livestock guys are pretty much okay. It's the ancillary kind of work in the rural India. Things like we've been funding kirana shops or small cloth shops and stuff like that, which have remained under the lockdown and are also not classified under the essential services, hence have been facing a lot of, downfall in their incomes.
The way somebody described it is life versus lifestyle, right? So people involved in life activities like food or milk or stuff like that are relatively fine and they have restarted. It's the people involved in the lifestyle activities, which are facing the issues.
And it's across geography the similar thing, or is it like specific?
As I said, I don't have the. Maharashtra is the biggest issue. So August, Gujarat was about 85. I think I said UP, MP were both about 75. Rajasthan was 85. And Maharashtra repayment rate was about 59%. So whatever the weighted average works out to be, I don't know. So that's the repayment rates of the states in August.
Thanks for this. One last question from my side. Any new products that you are looking to come launch?
I don't know.
To come out of this.
Well, the wheels are always churning in our head, but I don't think right now is a good time for trying anything too new or drastic.
Why don't you tell him that Feria Walas that we have been...
we started tying up with SIDBI and with the government for the street vendor, the guarantee scheme that the government's coming up for the street vendors. So that's part of our microfinance anyway. It's just that the government is guaranteeing a small portion of the book. Atmanirbhar, part of the Atmanirbhar initiative. But otherwise, we always do things with pilots and we rather have long pilots. So nothing in work right now.
That's it from my side, sir. Thank you.
Thank you. The next question is from the line of Satparshi Chatterjee from Centrum PMS. Please go ahead.
Yeah, sir. Thank you for the opportunity. Sir, my question is again on this 12% customers who have not paid any EMIs to us. So have we been able to contact all of them and what is our collection process for these customers? Like you have said that we would not prefer restructuring and you have not given top-up loans also as a maybe proactive measure. So now, are we able to physically reach them or what is our collection process as of now, action items for these customers?
So most of them, we can reach them. A lot of them are people that I said are completely disrupted and, thankfully there are government programs in place, otherwise they would be in dire straits. Very few of them, we are in touch with most of them, either through calling or, we do have a telecalling team that calls them, but I think mostly it's a high-touch model, so our FOs visit them as well. Nobody has really, or the vast majority have shown a willingness to pay, but they require some time. So some of them have claimed that, we'll pay after the moratorium. Some of them are saying that, the government has allowed a moratorium, so why are you coming right now? Come in September. And in extreme cases, some of them have said that come after Diwali also. So it's rather a very mixed bag. But yes, I think it's very important to concentrate on those 12% customers in the next 2 months, especially in September and October, because after the moratorium being over, if we cannot restart the payments, then it will be very difficult as time goes on to restart those payments.
But maybe his question was this: how are you getting in touch with this kind of people? So It's
a field.
It's a field level. It's a field level, and we have a calling people who has regularly calling them that you owe so and so, and nowhere, and I mean nowhere in the conversations you want to do anything like a strict language or anything. All you want to find out is how is the family and has everything has been okay. And only in one sentence you want to tell them that there has been a little delay in your payments, and that's about it. You under no circumstances you want to do any kind of a harsh words. So that's my input on this.
You have to be sympathetic. I don't think this is a situation where muscle flexing is going to go anywhere. I think it will lead to a very disastrous situation,
right.
both for us and the customer. And you have to be very sympathetic. I mean, these are not willful defaulters, right? They've had their life come crashing down. They have to worry about feeding their family and taking care of their life functions before they start paying the installments. And I think that's fair enough. So I hold no ill will against these customers. But at the end of the day, I run a business, so I'll have to make sure that somehow or another I get them restarted, as many of them as I can.
But we are not doing any top-off.
Yeah. So as far as the top-offs are concerned, I think lot of MFIs have started doing top-off loans, and I think I have never, or rather we, on a cultural basis, have never been big fans of top-off loans, considering that you might evergreen your own portfolio. So fundamentally, we were against it. However, I can see why some of the other MFIs are doing it, because a lot of these customers might need a little bit of a cash infusion to restart their businesses and stuff. But I don't know. I mean,
but in order to recover the old dues, and you want to do the top-off loan, that's I personally feel that's not a right approach.
We saw that happen in some cases during Demon and stuff like that. But anyway, that's neither here nor there. Anyway, any other questions?
Yeah. Thank you very much. It's very helpful. Just on this follow-up only, this kind of top-up loans which are being done by other MFI players, does it concern you in terms of customer behavior getting changed because of these top-up loans? Does it concern you?
No, it doesn't concern me that much. I mean, these are very fundamental microfinance kind of culture issues, right? It's a matter of the customer psyche. I was never too convinced on the top-off side, but even before COVID, a lot of MFIs believed in them, right? You start them off small and start giving more. So I think it's a difference of opinion. I'm not going to claim one method is better than others, but I have very specific reasons why I feel that my method is better, and will leave it at that.
Okay, thank you. And last question is, what is our yield on the MFI disbursements that you are doing in August?
So we are, it's as per RBI guidelines. So in August it was about 22.85 or something like that, average.
Okay, thank you. Thank you so much.
Thank you. The next question is from the line of Parth Parekh from Prudent Corporate Advisory. Please go ahead.
Good afternoon, sir. Given the interactions you have had on the ground and our collection efficiency, what is the assessment of gross slippages in FY21? Is there a possibility for this number to reach around 5% of the loan book?
Of course, you try to get an answer out of it.
Yeah, right. I knew that there will be multiple ways to word that same. So I'll give you the same answer I gave Amit and the other guys, that I don't know what it will be like. It could be 5, it could be lower, it could be higher. At 5%, it's something that we can easily deal with. Let's just put it that
way.
way.
It is very premature at this juncture. Only 3 days has gone by while the moratorium is over. So it will take a little more time for us to understand the field level.
And let me tell you also that there is not going to be any magic bullet. Once you have crossed the moratorium barrier on 31st August, that all your customers will start paying. It's going to be at least until November or December until what I feel that some normalcy will resume in terms of disbursements and collections. So, we'll just have to keep working at it for the next few months. But yeah, I mean, at 5%, I think I'll be happy to put this behind me and move on.
Right. Sir, and my second question was the yield on advances for our bigger MFIs would be somewhere around 20%, while for us that ratio is closer to 25%. So does this imply that our customer profile, which we are catering to, is more riskier, and there is a higher probability of defaults on our portfolio?
Who's charging 20%?
Sir, Bandhan Bank or Credit Access will be lower than 20%, the yield on their advances.
Bandhan Bank, maybe I agree with you, although they had increased it in the last quarter of Q4. I cannot compete with banks, but I know as far as MFIs are concerned, my yield is on average much lower than the average of many others. I mean, if you look at even larger players than myself, it's about 24% or something like that. So,
22 point something.
Well, that was in August. He's talking about the yield on the portfolio.
Okay.
So, couple of things. No, I don't think our portfolio or we are targeting riskier customers. Our customers are not very, very price sensitive to begin with. So, I don't think 22 or 24%, that 2% is going to make a very material difference.
That does not make a difference of more than 10 rupees on the year.
And our, our rates are regulated by the RBI. So unless there is a very, very large difference in the yields, so far there is enough takers for microfinance where it's not, it has not become that competitive yet.
Right. That would be it. Thank you, sir.
Thank you. The next question is from the line of Pooja Ahuja from Equentis Wealth. Please go ahead.
Yeah, thanks for taking the question, sir. Are we looking at used two-wheeler segment?
No, we did that many years ago, and we tried a pilot in that, I think, probably 10, 12 years ago.
Yes.
And it was a sort of a disaster. So, I mean, we learned our lesson and we are not into used two-wheelers. Of course, the scenario would have changed over the last 1 decade. But this is not something that we are too,
Even though we have tried sometimes, whatever vehicles that we repossess, we try to do the financing on those repossessed assets or repossessed two-wheelers. But no, we have not been successful in this, because
the profile of the customer who finances used vehicle seems to be riskier than a normal guy who's purchasing a new two-wheeler. Now, I'm not trying to create any stereotypes or anything here, but that's just the math.
Okay. All right. Yeah, that's it.
Thank you. Take the next question from the line of Shripal Doshi from Equirus Securities. Please go ahead.
Hello, sir. Good evening, and thank you for giving me the opportunity. So my question is that most of so this is probably the first time where we have given blanket moratorium at regulatory level. So and for which we will be charging interest also, right? For giving the customers the moratorium. So have you seen any unrest or say any dissatisfaction on the customer side? Because in a normal course of situation, for example, if there was a flood and if the customers were given as a delay, were paying their EMIs with a delay of 2 or 3 weeks, there was no interest concept charged earlier. However, this time that is there. So are we seeing any, say, dissatisfaction or unrest or some sort of, they sort of telling you that this is not something that we are happy to pay or something like that?
That's actually a very good question. That is something that we have also been concerned about. But, so far, the people that have actually, so way the moratorium, quote unquote, restructure works is that everything gets pushed forward and the access to contractual EMIs will come following their last EMI so if they have to pay 24 installments, the extra that they'll have to pay will come in the 25th or the 26th installment. If you are a customer there, the moratorium interest will be very low, right? It will not be very large because outstanding is very small. So the extra will be very high. We'll have to worry about with the customers who had a very high principal outstanding, as in their loans were originated, right before the moratorium or a few months before the COVID situation arose. So for them, we'll have to put it, maybe 20 months down the road or 12 months down the road, because those ones will be the ones which have a much, much higher payout requirements. Right now, the repayment started. So it doesn't bode well for us to say, okay, well, in 20 installments, make sure that you remember you'll have to pay us another extra installment. I don't think that is the right way to approach it. I think it's better that you let them restart paying, let them be regular once again, and then once this time is over, come in the fourth quarter or something, we'll broach the topic if and when required. But for the ones that have their contracts are over and they have a small amount of interest accrued payable, usually there is not a resistance because it's not a very large quantity and the customers are anxious about their outstanding so they can apply for another cycle.
Okay. So that was the only question that I had on the qualitative side. And thank you for answering it, sir.
Yeah. So, operator, I think we'll have time for one more call.
No questions in the queue as of now.
Okay, perfect. Just in time then.
Sure. So, I hand over the call to the management for closing comments.
I have no closing comments prepared, but thank you so much, everybody, for joining us. And stay well, stay safe. And, I'm sure that, this thing will be behind us soon.
Well, the microfinance customers are very resilient customers.
Yes.
And they have come across lots of difficult times like this, be it a flood, be it an earthquake, be it a demonetization. And they have come out...
first to get into trouble and first to get out of trouble.
First to get out of the trouble. So I'm absolutely, we are not worried about it. And hopefully we'll come out of this also. And, God has been kind to us. Let me put it this way.
Yeah. So thank you, everyone. And I think we'll end the call.